Hello there. Welcome back to Financial Accounting Info. Today we want to look at question 3 of the recent question paper, that is November 2023. And of that question paper, we're going to look at the preparation of departmental accounts. So the question reads, write stationers as two departments, toys as stationer, and use the periodic inventory system to prepare the financial statements. Use the information below to prepare the following. On first part, which is 3.1, we've got prepare and close of the departmental purchase account. And then at second part, which is 3.2, prepare a departmental statement of profit or loss. And we've got a note there that we need to take note, which reads, where applicable, show all the calculations in brackets. So it means if any item that we're going to put in those departmental accounts, if there's any calculation that is leading us to the final figure, we have to summarize it in the brackets. So we go to our question. So this is our question that we have. We are given the list of balances there, whereby we put a details column, total column, toys column, and then we put stationery column. So we have got also adjustments and additional information that is given in that question paper. So if you go down, you see that we have got about 6 additional information that we are given. And let's take note, the question is 30 marks. So we are going to start with the first part, which is the preparation of the departmental purchase account. So if you come to answer section, you see that this is our departmental purchase account. So remember, a purchase account is got a normal debit balance. Whenever we purchase goods, we are supposed to debit the purchase account. And whenever there are drawings, remember this is a periodic inventory system that is being used by this business of price stationers. And when there's a when we are using the periodic system, we replace the inventory account with the purchase account. But if we are using the perpetual system, remember we've got two systems that you can use. We have both the periodic and the perpetual. On the perpetual, we prepare the purchase account in place of the inventory account. But if it's a perpetual inventory system, we open an inventory account. So whatever movement of goods that is going to take place, we are going to adjust it in the purchase account. Whenever there are tens, we also as they are going to affect the purchase account, and whenever there are drawings also it's going to affect the purchase account. So this is what we have in terms of the purchase account. So obviously we are going to start with the balance brought forward. That is the balance from the last period, and we're going to put it on the debit side. So here we are going to say balance brought forward, and then we go to the question to check the balance that we have in the beginning of the question. So if you come back, let's try to see what balance to have in the question. So you see that purchases here, we've got for toys, we've got 118,000, for stationery 84,000. So these are the balances that we are going to start with on the debit side of the purchase account. So we can go and enter those figures. So we are saying on toys, we've got 118,000. And then for stationery, we've got 84,000. Then we go again to check in other adjustments that are going to affect in terms of drawings and other adjustments. So if you go to the list of balance that we are giving, you'd see that we've got nothing else that is going to affect our purchase account. But if you go to additional information, we've got some information that we have there that is going to affect the purchase account. So let's look at the first item, which is additional information number 1. Mr. Right took home for his child's birthday. Mr. Right took toys home for his child's birthday party. At market selling price was 10,500 rands. Right stationary price toys at a cost plus 200%. So what does it mean? It means this 200% that you are given. Remember, they are saying cost plus 200%, which means we have got the cost price. We have got the cost price, and then we add the markup, and then we get our selling price. So it means 200% is the markup because it's the additional. The additional becomes the markup, so it means here we put 200% representing our markup. Then our cost price we are not given, but remember, cost price is always 100%. So it means cost price is 100, and then if you add by 200%, these are percentage, they get your, if say 100 plus 200, you're going to get your 300%. So this is what the representation that we have in the form of percentages or the distribution that we have between cost price, markup, and selling price. So what does it mean? We are given a figure of 10,500 in the selling price. So it means 10,500 is representing our selling price, and the figure that we want is the cost price. Because these are drawings. Remember, if they are drawings, it means these goods are going to be taken from the inventory that we have. And remember, the inventory is being replaced by the purchase account here, because it's a periodic inventory system. So if you go at the beginning of the question, you'll see that there is an indication in terms of the type of inventory system that is being used. If you come here, you see that at the beginning of the question, it's writing periodic inventory system. So whenever there's periodic, any adjustments in terms of the movement of inventory is adjusted in the purchases account. So if you come here, you see that now the double entry that is there, and when there are these drawings, it means we are going to debit the drawings account, and then we are supposed to credit the purchases since it's a periodic. If it was a perpetual, we are going to create the inventory system, the inventory account, sorry. So this is what we have. So you see that the account being affected here is the purchases that is being asked in the question. So it means we are going to credit purchases here. So we are going to credit purchases at cost price. We are going to credit at cost price, and the cost price is here. This is our cost price. We are not given the cost price, but we are given the selling prices, which is representing our 300%, and then our cost price is 100%. So to get our 100%, we can just use proportion there. Simple proportion, we are going to say we are given 300 equal to 10,500. So 100 is the figure that we are looking for. So basically there you can use that just a simple formula that you use there, that you say what you don't have as a numerator, and then what you have as a denominator, and you multiply by the given figure over 1. So what I'm going to do, what you don't have is 100%, so 100% becomes your numerator, and what you have is 300% becomes your denominator. You multiply by the given figure is 10,500 over 1. So let's try to calculate that one. Let's try to calculate that one. So you see that if you calculate that figure, if you calculate correctly that figure representing drawings, you are going to see that we don't get 3,500. So this is the cost price of the goods that were taken by the owner of the business for personal use. Remember, any goods that is taken for personal use represents. So after this double entry, we are going to adjust now in the purchases account. So if you go on the answer section, remember we are saying we credit purchase account, so we are coming to the credit side and we are saying drawings. And remember, these drawings we can go back to refer to see are these drawings affecting toys or they are affecting stationery. So go up there, see that our drawings are here, they are affecting toys. So here you see that right, two toys, one for each child's birthday party, which is for personal use. So toys is the one that is being affected, the department being affected. So we are going to put it under toys as 3,500. Then we go ahead and check on the additional information, any other adjustment that is affecting purchases. So if you go there, you see that item 2 also is affecting purchases. There is toys purchased for 4,500 was incorrect debit to stationery. This must be corrected. So yeah, it seems there were purchases that took place of toys, and then they were debited to stationery. So we have to remove it from the stationery account and then enter it in the toys account. So what does it mean? It means it's on the debit of the debit of the stationery. So we need to remove it from the stationery account. So the scenario that we have is that this amount is in stationery, and it's on the debit side. So to remove it, we go to the opposite side and enter it there. So it means we are crediting a stationery, and then we post it to the correct account, which is the toys account. And then we go to the debit side of the toys account. So this is the double entry that we have, that is crediting stationery and debiting toys. And all the two accounts are there in the question in the departmental pages account. So we are going to enter that double entry. So if you come here, you see that we are now saying we are crediting stationery. So you can say transfer. This is a transfer that is there. Transfer. And there's a transfer of 4,500. We are crediting stationery, 4,500. And then we debit our toys. And you can just say transfer stationery. Transfer stationery of 4,500. This one is a transfer to toys. So this is what the double entry that we have. So if you go back to the question, we can check any other additional information that you think is affecting purchases. But if you go through other additional information that we give, see that there's nothing that is affecting our purchases. So we're going to leave it like that. So we can balance our account now. Remember, first of all, we are going to balance toys first. You see that we are looking at this column against this top column. We add the two, that is debit side of the toys, and then you compare with the total of the credit side of the toys. So you see that if you add the debit side of the toys, you are going to get 122,500, and it's a greater total. And remember, the greater total will come in between the lines. So what we are going to do here, we can put our double lines, and then we can put the same on the credit side. And we are saying the debit side of the choice is a greater total of 122,500. So it will come both sides in between the double lines. So we are saying 122,500. Then we subtract this figure of the total of the credit to get the balance. So basically we are saying balance. This is the balance which is going to the trading account. See the balance that is going to the trading account. So we're saying 122,500 minus 3,500, we're going to get 119,000. So here we get 119,000. When we do the same for stationery, we are comparing the stationery debit side and the stationery credit side. So what are we going to do to compare the two totals? So you'd see that we would 84,000 on the debit of stationery, and we put 4,500 on the credit. So obviously 84,000 is the greater, so it come in between the double lines. Then we say 84,000 minus 4,500 to get the balance that is being transferred to the trading account. 84,000 minus 4,500 to get 79,500. So this is what we have in terms of the departmental purchase account. Obviously, next we have got the on 3.2, we have got the departmental statement of profit or loss for the year ending 2021. So what are we going to do there? We are going to start with revenue. We are going to start with our revenue. So here we are going to say revenue, and then we go to our list of balances to check the figures that we are given for revenue. So if you come here, you will see that revenue for toys, we got 287,500, and for stationery, we got 132,500. But we check if you've got sales returns, they are going to reduce the amount that we have for revenue. We've got sales returns for toys here, 12,500. So we are now here, 12,500. We've got 7,500 for stationery. So these amounts are going to reduce the amounts for revenue. So you're going to say for toys, 287,500 minus 4,500. The for stationery, 132,500 minus 7,500. Then we get our net figures that we're going to put there. So we can just go and summarize there on the other section in brackets. Remember, there's an instruction that we should show all the workings. So we are here. On the first part of toys, we are saying 287,500. We subtract 12,500. And another working that is there is for stationery. when just say end to separate the two workings, we are saying what we've got 132,500 for revenue, then subtract the sales change, which is 7,500. So if you do that, it's that for toys, the answer that we're going to get is 275,000. And then for stationery, we are going to get 125,000. And then after that, obviously, we are not going to less cost of sales. And remember, our cost of sales will leave blank because we're going to calculate the cost of sales. We did that. Remember, the formula for calculating cost of sales, we say opening inventory at purchases. If we have got some purchase returns, we subtract from purchases. And then if we have got some carriages, we add them, and the custom duties, we add them again. And finally, we subtract your closing inventory, closing stock. So this is what so we are going to just summarize that we are working beneath uh, the heading that we have there for cost of sales. So here we are going to start with opening inventory at the beginning of the year. So for opening inventory, again, we go to the question. I think we find it there, see it in the list of balances. Remember, opening inventory is given in the trial balance, in the list of balances. And then closing, obviously, we find it in the additional information usually. But in this case, you see that we are given all the figures there. That is, we've got opening inventory at 1 January 2020. That is our opening inventory. Then closing inventory is on 30 June 2021. So here, opening inventory is 20,000 for toys and 30,000 for stationery. So you can just go there and enter that. We've got 20,000 and then 10,000. And then we add purchases. We add purchases. And for purchases, again, we go and check what figures do we have. Purchases, we have got 118,000 for purchases. Let's try to see. For purchases, we are going to check the figures that we got in the purchases account. Remember, we prepared the purchase account. So we go back there and just try to see the figures that we found in the purchases account. So if you come here, you see that these balances that we got in the purchases account are the figures that we're going to transfer here under cost of sales. So we have got 119 for toys, 79,500 for stationery. So these are the figures that we are going to use there. So we come here. We are now seeing the purchases and the figure for purchases that we have there. We have got 119,000 for toys and 79,500 for stationery. So we now check if we put our some purchase returns or some carriages also. Remember, carriages, we add them there for find the figure for cost of sales. So you see that we've got carriage on the revenue. Carriage on the revenue, we don't include it in calculation of cost of sales, but we put it under less operating expenses. So we are not going to put it there. We check for other figures, carriages. So if you don't find it there, you go to additional information to see if you've got some carriages or purchase returns. But see that there's nothing like that. So obviously now we are going to our closing inventory. Closing inventory is on 30 June 2021. We've got 25,000 for toys, 31,000 for stationery. So we come back there and say let's closing inventory. Let's closing inventory. Then for inventory, we've got 25,000 here, and then we've got 35,000. So this is what we have. So we remember we are saying less there, so we subtract. Then after that we close to verify the figure of cost of sales. So for toys, we're saying 3,000 plus 118,000 minus 25,000. The figure that you are supposed to get there is 114,000. If you subtract, because here you're saying less. So here 30,000 plus 17,500 minus 35,000, you get 74,500. So this is what we have. And then our cost of sales, obviously, we now want to find the figure for gross profit. So it means here we now have gross profit. In the formula, to find gross profit, we are saying our revenue minus cost of sales. So I'll go up there to see what we have in terms of those figures. You see that our revenue for toys is 275,000, and then subtract 114,000 to get our gross profit, which is going to come here is 161,000. And then for stationery, 125,000, subtract 74,500 to get our gross profit here, which is going to be 50,500. So this is what we have. Then after that, now obviously we are going to the add other income section. So we are saying here add other income. We are looking for other incomes. We might have rent income, commission receipts, and other items of income that might come under that, depending on the question. So we go back to check which income do we have. And we also have to take note that we've got two departments there. So we need to know how to apportion if we are given one figure. Like here, we are given a finance income of 33,000. So what does it mean? It means we need to apportion it between toys and stationery. So the apportionment criteria that we are going to use, we see it on the additional information. So we check there on item 3, it's telling us that finance income must be shared in the ratio of 4:2 between toys and stationery. 4:2 between toys and stationery. So what does it mean? It means 4:2. So we have got toys and stationery. So the total figure that we have is 3,000. So what are you going to do? We add the 2. 4 plus 2, we get 6. And your 6 becomes your denominator. So here we are saying for toys, we are going to say 4/6 times the figure that we have there is 3,000. It's 3,000 over 1. So we calculate less it is. And if you calculate correctly, you are going to get 2,000. This is for toys. This is representing our toys. And then if you go to our stationery, we are now saying stationery. We are now saying we've got a 2 as representation of stationery. So we are saying 2/6. If you multiply by 3,000, obviously, okay, there you get 1,000. So this is what we have at the discipline that we have between toys and stationery in terms of finance cost. So these are the figures that we're going to enter there. So basically, we are just going to say finance costs. And then in brackets, we summarize the working, whereby we are saying for the first one, we said 4/6. And then we multiply by 3,000. And then we say ends. We summarize the second working, that is, we said 2/6. And then we multiply by 3,000. Then remember the figures that we got there was 2,000 for toys and 1,000 for stationery. So this is what we have. Then we go to check if we've got any other income that we have there. So we go to the question list of balances. We go on the list of balances and see what other income do we have. So you see that just beneath finance income, we've got rent income, 45,000. So we would want to see again how are we allocating the rent income. So if you go to item 4 here, it says the rent income must be allocated in the proportion of floor space used by each department. So if you go to the question, you are given this floor space proportions that we have there. So the proportion that we have got 240 meters squared for toys and 360 meters squared for stationery. So this is exactly how we are going to calculate it. So we can just try to see how we can calculate it then. Let's try to see how we can remove this so that we put the working there. Right. So what we have there is that we have got 240 for stationery. So this is our stationery. This is representing our stationery. And then we say S2 or 360, and this is representing our toys. So 240 is the first one. I think we can just try to rephrase it there. We are saying we have got 240 is to 360, and the first one is representing twice, and this one is stationary. So what do? We add the two to get the total 240 plus 360. Let's try to see what we get there. Say 240 plus 360. And you want to get 600. So 600 is going to be the denominator. So for the first one, twice 240 over 600 times the total for rent income. See that we've got 45,000 for rent income. So you're saying 45,000 times 45,000 over 1. So for rent income, you're going to get 18,000 for the first one, which is twice. Then obviously we now do the same for stationary. Right, for stationary, we are saying we have 360. 360 and divided by 600, then we multiply by 45,000. Then if you do that correctly, you're going to get 27,000. So this is what we have in terms of this one. And then we can go to the other section and summarize the working as it is. We get rent income. So on the first part, we said 240 over 600. Then we multiplied by 45,000. And then ends, we put the second working whereby we are saying on the second working, we are saying 360 over 600, then we multiply by 45,000 over 1. So we close the bracket, and remember the figures that we got here, got 18,000 and 27,000. So this is what we have in terms of our rent income. So if you go back to the question, you'll see that we have got no other income that we have in the question. So here we are closing so that we get the totals for other income. Remember, the totals for other income are going to come straight with where we have the description of other income. So if we add the two, that is 2,000 plus 18,000, you get the total here. And the total that you are supposed to get there for other income, 2 plus 18, obviously you get 20,000. Then you say 1,000 plus 27,000, obviously you get 28,000. Then we now add the gross profit to the other income figure that we have, and we get the figure that we get here is called gross income for the gross income for the. So to get the gross income for the year, we say gross profit plus other income. So we get 161,000 plus 20,000. You're going to get 181,000. Then for this is for toys. For stationery, we are saying 50,500 plus 50,500 plus 28,000. Then we get 78,500. So this is what we have in terms of gross income for the year. Then we go down. We are now on the section of less distribution, administrative, and other expenses. So here we are saying less distribution, administrative, and other expenses. Right. The figure we are not going to we are going to leave it blank there because we're going to calculate all other expenses there in terms of distribution, administrative, and other expenses that might be there. So we're going to list them beneath this. So we go back to the question and try to find them. What other expenses do we have? So we can go back to the list of balance that we have there. So if you go down from revenue going down, we'll be trying to identify the other other expenses that we have. We go down, you'd see that the first one that we're going to pick there is carriage on revenue. And it's already portioned between toys and stationery, 750 for toys, 1,000 for stationery. So we go back and enter that one. Remember, carriage on revenue falls under this section, but carriage on purchases, we are supposed to put it under the calculation for cost of sales in the trading account. So here we are saying carriage, carriage on revenue. And for toys, the figure that we have, we've got 750. And then for stationery, we've got 1,000. So this is what we can go back again to check other expenses. We've got advertising, but we're seeing that advertising is given as a single figure. It means we have to apportion between toys and stationery. So how we are going to apportion it, obviously we get it in the additional information. So it's, if you go to item 5, advertising expenses must be allocated in the proportion of the gross revenue of each department. So let's just pick the figure that we have for advertising, and we go to see the allocation of revenue that we have there after deducting the sales returns. So here we are saying for advertising, the figure that we have is 80,000. Then the revenue figures that we are going to use are the revenues after deducting sales returns. So we come here, you see that revenue, the revenue figures that we got at the beginning, there's 200, we got 275,000 for toys and 125 for stationery. So these are the figures that we are going to use. So we are saying 275,000 is to 125,000. And this is toys, this is stationery. So the total figure that we have, remember, we've got, let's try to see what's for revenue. What figure do we have for advertising? Remember, we have got 80,000 for advertising. So this is the figure that we are going to portion between the two, 80,000. So we are saying 80,000 figure that we are going to apportion between two. So this is the ratio. So we add the 275 plus 125, and we try to see what we get there. 275 plus 125, and we are going to get 400,000. So it means the total that we have there, this is the total, it's close to 400,000. So this becomes our denominator. So for toys, we are saying 275 over the total, which is 400,000. Then we multiply by 80,000. Is the total for advertising. Then you get the figure for advertising, which is 55,000. Then we also do the same for stationery now. So for stationery, we are now saying we have got 125 over 400,000. We multiply by 80,000 over 1. Then we do that at the calculation that we're going to get, the answer that we're going to get there is we're going to get 25,000. Let's try to calculate it by saying 125 divided by 400, then 108,000, get 12,000. So these are the figures that we are going to put for advertising. But obviously, we are going to also summarize the working. So we come here. So we are saying advertising. So here we are saying advertising. So obviously in brackets, let's just summarize the way we did it. On the first part, we said 275 over 400. Then we multiplied by 80,000 over 1. Then ends second working, we said 125. Said 125 over 400 over 400,000 times 80,000 over 1. And the figures that we got on the first part of toys, we got 55,000. and then here we got 25,000. So this is what we have on advertising. We go and check another expense that is there. Right. After advertising, we got finance income. It's not part of that. Rent income is not part of that. But we've got salaries and wages. This comes as the last one, as we are seeing. So for salaries and wages, the figure that we have is 180,000. Then we can see what apportionment criteria is being used. On item 6, salaries must be allocated in proportion to the number of employees in each department. So if you come here, you would see that number of employees that we have is go for toys, 24 for salaries. So remember, the first column is for toys, and then second column is for salary. So this is what we have. So we go for 24, and the total amount is 180,000. So what are we going to say? We have 12 and 24 representing toys and stationery. So we are saying 4 is to 24. And this is toys, this is stationery. So total figure 4 plus 24, what do you get? You get 36. So for toys, what is important is for you to try to identify how can we calculate for toys. So for toys, we are saying, this is toys now. We are saying total is the denominator. So for toys, is we have 12. So we've got 12 over 36 times the figure that we have is 180 over 1. And then the answer that we're going to get there is 60,000. Then for stationery, let's try to see for stationery. Right, for stationery, we are saying we have a representation of 24. Total is 26, so it's saying 24 over 36, then we multiply by 180,000 over 1. And obviously, you calculate that 1 over 36 times 180 over 180,000 over 1, you get 120,000. So these are the representations of toys and stationery. So we are going to put as it is in our statement. So we go there, and obviously we also summarize the working. So here we are now saying salaries and wages. So we can start by the first formula, whereby we say it's 12 divided by 36. Then we multiply by 100,000 over 1. And on the second part, we said 24 divided by 36, then we multiply by 180,000 over 1. So obviously, on the first part, the answer that we got there was 60,000. And on the second part, the answer that we got there is 120,000. So this is what we have. And then obviously we did the totals now of less distribution administrative and other expenses. 750 plus 55,000 plus 60,000. Then we can close the and try to see what figures are we getting there. So we are saying 750, get our 55,000, and then we get our 60,000. 60,000, 55,000, 750. And then the answer that we get is 115,000. So here we are getting 115,750. And obviously we are subtracting this figure. Then you are saying 1,000 plus 25,000 plus 120,000. So 1,000, we add 25,000, and then we get 120,000. Then answer that we get is 146,000. So here 146,000. Then obviously we subtract. So on the first, on top that there we've got gross income for the year. So we are saying gross income for the year minus distribution, administration, and the expenses total, and then you get your figure for profit or loss for the year. So if you get a positive figure, it's a profit. If you get a negative figure, it's a loss. So 181,000 minus 150,750, the figure that we are supposed to get there, we are going to get 62,250 as a positive. So this is a profit, but it's a positive figure. Then we go to the second part for stationery. We are saying 78,500 minus 146,000. We are seeing that our gross income is less than our expenses. So it means this one is going to come as a negative and it's a loss. So we are coming here. The answer that we are supposed to get there, it's a negative 67,500. And when it's a negative, you leave it in brackets to show that it's a negative figure. So these figures, we call them profit or loss on, say profit and then or loss. Then loss, you put brackets to show that if it's a loss, be in brackets for the figures. So the first part is a profit because it's a positive. Second part is a loss because it's we left it in the negative form. So this is what we have, guys, in terms of this video on the preparation of departmental accounts. Let's stay tuned. More is going to come as we prepare for exams. Those who haven't subscribed, please subscribe and share. Yes, for this video, I'm signing out.